Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the gold market. So situation on intraday charts has started changing. In general, the initial positions, initial entering points that on the bottom of the grabbers here and here still stands intact. So they're protected with the break-even stops, and actually here we need to do nothing. But the question is about possible new positions taken, whether it makes sense to do this, and how it better to do this if you would like to. So in general, as I explained in today's video on the euro currency, overall situation stands a bit tricky because we have some contradictive patterns that are forming across the board and all time on all assets. Cross-market analysis, for example, as we already considered on the dollar index. From the one point of view, we have the bearish grabber that stands here suggesting weakness in the dollar and taking out of these lows. At the same time, we have clearly looking at the possible hand-shoulder shape here and with great engulfing pattern on the board, which is potentially also is not failed yet, so it is still valid. And that is a combination that brings you lots of uncertainty in the current situation, especially at the eve of the payrolls report. The same story we could see on the 10-year bond. So from one point of view, you could see that the same hand-shoulder shape and engulfing pattern exist, but at the same time, you can see that with the forming of the right arm, market is dropping to the nosedive, and it's too fast acceleration on the points where actually bulls should have controlled the market, but it doesn't happen. So with this contradictional situation, we have to be really careful with the possible taking the position and using the break-even stops and so on. So as we did on the euro currencies and gold market. So yesterday, for example, in the gold market, if you take a look on the performance here on the hourly chart, that was the 618 support that we were considering, and we've got this minor bounce here out from there. But later, you can see on the session, the market totally raised it, and now is dropping more. So currently, that is invalidation point based on the daily grabbers. So if market will taken out of these lows, it means that the short-term suggestion, short-term trading setup based on the possible bullish performance here will fail. Or better to say, not to fail, but it just will not be formed, just because market even hasn't started the upward continuation. So the grabber has been formed, but no action has followed to this pattern. And currently we stand on the point that is, I would call, kind of the culmination point that gives you best risk reward for possible long entry, but it doesn't increase the chances that you succeed. So it just provides a better combination of the potential risk and reward, because your risk will be just until these lows. So very small distance to the failure. Why in general this scenario might be interesting? First of all, because we are getting the garter steeple to buy, but mostly because of the situation on the 4 time frame chart. Let's take a look. In fact, currently market is clearly taking the shape of the triangle. By a classical school of technical analysis, this kind of the triangles, where you have the slope line and the horizon line, usually breaks in a direction of the slope line. So this potentially bearish pattern based on a classical approach. But here, the thing that you could keep an eye on. So you can see market right now is flirting with the May-City. And if by some reason you will get the grabber here, market will return right back up within a few hours, and the bullish grabber will be formed, especially on the background of this possible garter steeple to buy. That might be a really great combination. With a very small risk, you could get the nice entry opportunity and chances that market will still change the direction. So this is the most attractive moment in the current situation. So we have potentially small risk, market stands very close to the invalidation point, we have potential bullish pattern inside. This is actually the last point where you still think about the possible taking long position, because if it will not hold, the market just will start dropping As I said, that will be the crush of this potential scenario. So, and that is the last point where market has to either start up prediction or it just failed. So that's why this is actually makes it overall situation simple to deal with it. And finally, with this all background, potentially it might be the grubber, and if it will be formed, it might be really great background, great indicator in favor of the more confidence in the current situation. That's in towards what we have on the gold. Here's risks exist, yes. So overall, at the current moment, the situation doesn't look bullish. But the appearing of the grubber and bounce on intraday charts might change everything from top to bottom. So just keep an eye on it. If you don't want to be involved in all this stuff, just do nothing, because in general, by the regular approach to the current situation, I would say, if we wouldn't consider these minor details with the grubber, with the 222 that we have, taking the general look, currently it seems a bit too deep retracements based on the performance on the hourly chart and together with the daily chart. So in normal situation, when the grubber appeared, you expect smaller pullback. So somewhere to the 618, that might be perfect situation. When we talked about this, yes, the possible hand short, 618 retracement, starting with the upper direction. That is how perfect scenario looks like. Here we have a bit different picture that is different from the perfect scenario. So it means that it has less risk to less chances to success. But at the same time, we have some hints, some points that we could keep an eye on, and reward for this more risk is also will be greater, because we could get the chance to take the position at the better price. That and towards what we have. So think about this, decide if you would like to. You could try to do this. If not, and it would be better to wait and see what will happen with this big triangle, and just keep an eye on what will happen on the perils report on Friday.